Hey everyone, welcome back to Corporate Decoder, the place where we uncover the real story behind the corporate jargon. And today we have a big one, a business combination that could shake things up a bit strap. In folks, it is going to be a wild ride. We're diving deep into a recent filing from Rumble Incorporated, and it is packed with some serious strategy. Moves that could change the landscape for them, and potentially for a European data giant Northern Data AG. This isn't just a handshake deal, folks. This is a full-blown business combination agreement, and we're going to break down what it means for investors and the companies involved. Alright, let's start by looking at what Rumble is all about. This filing tells us that Rumble has Class A common stock with a very small face value of just $0.0001. Per share, this is pretty standard for publicly traded companies. And then there are these things called redeemable warrants. These are essentially options for people to buy Rumble stock at a set price of $11.50 per share in the future. This is important because it means more shares could potentially come into play, which can affect how the existing shares are valued. Now, the main event happened on the 10th of November 2025. This is the date when Rumble and Northern Data AG officially inked a business combination agreement, or BCA. This is the big document that lays out the plan for these two companies to join forces. Okay, so Rumble is planning to offer all shareholders of Northern Data AG a chance to exchange their Northern Data shares for Rumble's class. A common stock, the exchange rate is fixed at 2.0281 Rumble shares for every one Northern Data share. Imagine trading your old coins for new shiny ones, but with stocks. They are also making this filing under a specific rule that means they are sending out written communications related to this deal to the public. This tells us they are being upfront about their plans and want to spread the word. Let's look at what Rumble stock is actually trading on major exchanges. The filing confirms that Rumble's Class A common stock is traded on the Nasdaq Global Market under the ticker symbol RUM. This is a well-known exchange and generally a good sign for a company's visibility. And their warrants, the RUMD ones, are also listed on the Nasdaq Global Market. This means there is a potentially significant number of shares that could be issued if those warrants are exercised. Rumble is identifying itself as an emerging growth company. This means they get to use some relaxed rules in how they report their financial information. This is common for newer public companies, but it is worth noting that they might not be as thoroughly scrutinized as more established players. This section here, item 1.01, is where they detail the entry into a significant and binding agreement. This is the meat and potatoes of the filing. The actual deal they've struck. This is the big one. The Business Combination Agreement, or BCA. Rumble and Northern Data AG are officially tying the knot here. The plan is for Rumble to conduct a public exchange offer. This means they are inviting all Northern Data shareholders to swap their shares for Rumble shares under a specific ratio we talked about earlier. Now, here's something really interesting beyond just stock. They are also talking about a potential cash payment of up to $200 million. This isn't guaranteed though. It is tied to something specific, a successful sale and commercialization of Northern Data's Corpus Christi location. This location is being looked at for high power computing. So if that deal goes through and makes money, shareholders might get a piece of that action. This is a big if and adds a layer of speculation to the offer. This merger is not a done deal yet. There are a lot of hurdles to clear first. The German financial regulator BaFin needs to approve the prospectus, and Rumble needs to get all the necessary regulatory approvals. This includes making sure Northern Data isn't facing any insolvency issues or major legal trouble like bribery or corruption. They also need to make sure Northern Data hasn't made any serious compliance violations. This gives us a glimpse into the due diligence process, checking all the boxes before a company can merge. And all of this needs to happen by a specific deadline, the drop dead date if things aren't wrapped up by then. The deal could fall apart. This creates a sense of urgency. Even before they get to publish the official offer documents, Rumble needs to see a report from a law firm that investigated some legal proceedings involving European prosecutors and the Swedish tax authority. This report shouldn't have any major red flags, and importantly, no government body should have made any accusations that could seriously harm Rumble, Northern Data, or their future combined business. This is all about risk mitigation. They are trying to avoid any hidden skeletons in the closet. Between signing this deal and actually closing it, Northern Data has to play by the rules they need to run their business as usual and not do anything that could mess up the merger. This is to keep the business stable and valuable until the deal is finalized. This is crucial during this waiting period. Northern Data is pretty much locked down. They can't go looking for other companies to merge with or be bought by. They can't issue more shares or pay dividends, and they can't take on too much new debt or do big financing deals without approval approval. This is to prevent them from doing anything that might jeopardize the current deal or its terms. They also can't make major asset purchases or sales or get into new joint ventures if the value is over 20 million euros, and they can't do anything else that is way outside of their normal business. If it has a big impact, this all keeps the business predictable for Rumble. Both companies are also making promises and warranties. These are essentially assurances about their businesses, like being properly set up, having the right legal power, their stock situation, and confirming they aren't violating any laws. They are also confirming their financial statements are accurate, and that there are no major lawsuits pending that could hurt either party. This builds trust in the deal. There are specific reasons why this deal could be called off. For example, if the exchange offer doesn't get enough support from shareholders, or if it is not completed by the drop-dead date, if regulators or courts block the deal permanently, then it is game over. This highlights the many things that need to align for this merger to succeed. Northern Data also has some outs. They can terminate the deal if Rumble doesn't announce the exchange offer as planned, if the offer they do launch is significantly different from what was agreed upon without their approval, or if Rumble doesn't get a key document called a written consent within 24 hours of signing. This written consent likely confirms a major shareholder's APRO. VAL, which is critical. Rumble also has its own reasons to walk away if Northern Data heads towards insolvency, or has a major compliance issue before the offer document is even out, and if Northern Data's boards don't give their official recommendation, or issue a negative one. Rumble can also terminate if Northern Data backs out of key promises, like exclusivity, or tries to negotiate with other potential buy. This shows there are safeguards for both sides to protect their interests. And here is something for the remaining shareholders. If Rumble ends up owning 90% or more of Northern Data, after the deal closes, they have the option to buy out the rest of the minority shareholders. This is often called a squeeze out, and it means everyone will eventually be cashed out or receive Rumble stock. Beyond the main BCA, there are these transaction support agreements. These are agreements with specific major shareholders to ensure they support the deal. One of the biggest deals is with Tether, an entity that owns a significant chunk of Northern Data shares, specifically over 41 million shares. Tether has agreed to sell all of these shares to Rumble. This is a huge commitment and shows Tether's strong belief in this merger. In exchange for these shares, Tether will receive Rumble stock. However, there is a catch. Tether cannot end up owning more than 9.9% of Rumble's voting power. If the shares they're supposed to get would push them over that limit, they'll receive a special warrant. Instead, it is a way for Rumble to manage who has voting control. Just like in the main agreement, Tether and Rumble are making promises to each other about their businesses. And this deal, Tether is agreeing to protect Rumble from certain financial losses if Tether breaks any promises, or if there are issues related to Northern Data's past peak mining business, or other past ventures outside their core data center services. This is essentially a form of insurance Tether is providing for specific past liabilities. Rumble can hold back a portion of the stock they owe Tether for up to 18 months. This is like a security deposit to cover any potential claims Tether might have against Rumble under their agreement. And it works both ways. Rumble will also protect Tether from losses if Rumble fails to uphold its end of the bargain. However, both sides' responsibility for these types of claims is capped at the value of the stock they are exchanging. This limits the financial risk for both parties. Here is another interesting point. Before and after the deal closes, Tether has committed to buying up to about 219 million euros worth of Northern Data shares directly from other shareholders who aren't participating in the main exchange. Often this is another way to support Northern Data's share value and provide liquidity for other shareholders. But there is a condition: Tether will only buy if the price of Northern and Data shares is below a certain level based on Rumble's stock price. It is not just Tether. Rumble is also making deals with other significant Northern Data shareholders like the art sellers and Apparent. They've all agreed to sell their shares to Rumble. These agreements mirror the one with Tether, ensuring more shareholders are on board with the plan. These next sections deal with the paperwork around registering stocks for resale and amending existing agreements. So Rumble and Tether will update their existing registration rights agreement. This means Tether will get the right to sell the Rumble shares it receives more easily. This is important for Tether to be able to liquidate those shares when they want to. They're also amending another agreement called the transaction agreement. This will clarify how the Rumble shares Tether receives will be treated under that agreement, essentially making sure Tether adheres to certain rules about those shares. Here is another interesting business deal. Rumble and Tether aren't just combining companies, they're becoming business partners. Tether will become a customer of Rumble, purchasing up to $75 million worth of GPU services annually for 2 years. This is a smart move for Rumble to secure recurring revenue from a major player. These are agreements where Tether is committing to provide Rumble with financial backing. Tether is also providing significant financial commitments totaling up to $400 million. This money is specifically earmarked to cover taxes for both Northern Data and Rumble. This is a substantial commitment from Tether, showing their deep investment in this combination and helping to secure the financial health of the combined entity during this transit. Yayon. Again, we see that 9.9% voting limit. If Tether's equity commitment would put them over that limit, they'll receive warrants. Instead of stock, this is all about maintaining control and ownership balance. Another business partnership is being forged here. Rumble is not only getting a business partner, but also a significant marketing client. Tether is agreeing to spend up to $50 million per year for 2 years on advertising and marketing services from Rumble. This means Rumble's own advertising platforms and services will be used by a major player, giving them a huge boost in that area. This section deals with a significant loan and its potential transfer. This is a big financial move. Rumble is taking over a receivable, a €603 million loan that Northern Data owes to Tether. This loan will be transferred to a new Irish company that Rumble is setting up. Specifically, this Irish company will hold the Northern Data shares post. Merger. This restructuring helps manage the debt within the new corporate structure. Rumble isn't just taking on this debt for nothing. Half of the loan's value will be exchanged for Rumble shares at a price of $7.88. Each. The other half will become a new loan agreement between Tether and Rumble's new Irish subsidiary. This is a complex financial maneuver to handle the debt. 1 year after the merger closes, Tether has the option to convert the remaining loan amount into more Rumble stock. This gives Tether flexibility and another way to increase their stake in Rumble if they choose to. And yes, you guessed it, the 9.9% voting limit applies here too if these stock issuances would push Tether over the edge. They'll get warrants instead. This shows a consistent strategy to manage ownership. This section is essentially a legal disclaimer and a guide for investors. It is telling everyone that this isn't a direct sales pitch for their stock, and that a formal prospectus will be filed before any offers can be made. They're emphasizing that all the official details will be in a registration statement filed with the SEC. Those with Northern Data shares are strongly encouraged to read all these documents carefully before making any decisions about selling their shares, and they can find them on the SEA's website. This is standard procedure for transparency. This is a heads up that certain people involved with Rumble might be considered participants in soliciting votes or approvals for this deal, and that information about their interests will be disclosed. This is about corporate governance and ensuring everyone knows who might have a vested interest. This is a very important section. It is a legal disclaimer about forward looking statements. These are statements about what the companies hope to achieve in the future, for example, future growth or expected benefits of the merger. The disclaimer basically says that these are predictions and actual results might be different due to various risks and uncertainties. This is so the companies aren't held responsible if these future predictions don't come true. This section really outlines the potential pitfalls. The success of this merger depends on many factors, including getting regulatory approvals, satisfying tough conditions like the outcome of investigations into tax allegations, and ensuring enough shareholders actually tender their shares. There is also the risk of integration problems, customer retention, and competitor pressures. The company acknowledges that things could go wrong, and the actual results might be very different from what they hope. For this is the reality of big business deals. This is the final section where they list all the supporting documents that are attached to this filing, basically the exhibits that prove the information shared in this report. And here are the key exhibits. First up, Exhibit 2.1 is the full business combination agreement itself, the foundational document for this entire deal. This is the actual contract that outlines the terms and conditions of the merger between Rumble and Northern Data. AG is the most important piece of evidence for this whole transaction. Exhibit 104 is the cover page of this report, formatted in a special way for electronic filing called inline XBRL. It is a technical detail for data processing. Now let's talk about what this all means. This is a massive move by Rumble. They aren't just growing organically, they are acquiring a significant European player. This immediately gives Rumble a much larger footprint internationally and access to Northern Data's operations, likely in the data center and potentially high-performance computing space. The involvement of Tether as a major partner and financer is also a huge signal. Tether's commitment of significant capital up to $400 million for taxes is not just about covering expenses, it is about showing their deep belief and commitment to the success of this combination. The stock swap ratio of 2.0281 Rumble shares for each Northern Data share implies a certain valuation of Northern Data relative to Rumble's current market price. Investors will need to scrutinize this ratio and the projected synergies to see if it represents a fair deal. The potential $200 million cash consideration linked to the Corpus Christi location sale is a wildcard. If that sale happens and proves lucrative, it is a bonus for Northern Data shareholders, but if not, that cash component disappears. The sheer number of conditions and termination clauses in the BCA is typical for complex cross. Border mergers, it highlights the inherent risks and the extensive due diligence required. The regulatory approvals from both the USCAC and Germany's BaFin are critical. Any hiccups there could derail the entire plan. The clear restrictions on Northern Data's actions during the interim period are designed to preserve the company's value and ensure a smooth transition. The partnerships with Tether beyond just the share purchase are also very telling. The customer agreements for GPU services and the marketing services show a strategic alliance. Rumble is not only acquiring a business but also securing significant future revenue streams and a powerful marketing partner. This diversification makes the deal look more robust. The handling of the €603 million loan is a complex financial engineering feat. By creating a new Irish subsidiary and restructuring the debt, Rumble is aiming to manage this liability efficiently. The option for Tether to convert its loan into Rumble stock gives them added upside potential. However, there are risks. The emerging growth company status means less stringent reporting requirements, which investors should always keep in mind. The forward-looking statements are filled with cautionary language, and rightfully so. Mergers of this scale are notoriously difficult to integrate, and achieving projected synergies often takes longer and costs more than expected. There is also the ever-present risk of competition and market shifts. The voting limitation for Tether is a smart move by Rumble to maintain control, but it is something to watch for potential future disagreements. Overall, this filing details an ambitious and complex transaction. Rumble is making a bold play for international expansion and market share. The strong backing from Tether provides a significant financial and strategic advantage. The success will hinge on navigating regulatory hurdles, effective integration, and delivering on the promised synergies. It is a high-stakes game with the potential for substantial rewards if executed well, but also significant risks if challenges arise. What is your take on this massive merger? Do you think Rumble and Northern Data will be a match made in heaven or a corporate collision waiting to happen? Let me know your thoughts in the comments below. If you found this breakdown helpful, please hit that like button and subscribe for more deep dives into the world of corporate finance. And don't forget to join our Discord community linked in the description for even more discussions and insights. Thanks for watching, and I'll see you next time on Corporate Decoder.